All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, here, another red week for the markets. You can see we came down and tagged that 390 level that I talked about last week, and that essentially coincided with the 618 here from the June lows. If we take that there's your fib. Just got shy of that 618 there. I talked about the 387, 388 level as well. But, we basically kissed that 390 area. It's, close enough for government work, I suppose. The nastiest reversal or the nastiest selling really came on Friday here as the market gapped up on the jobs number. So we got the Goldilocks jobs number that the market was looking for. And the market gapped up. You can see on the intraday here, nice gap. And then it looked like the markets were going to kind of just go to sleep and go into float mode. And then we got news from the out of Russia, basically shutting down Nord Stream 1 for the weekend. I think they're just toying with Europe at this point. But either way, it was enough to cause, a pretty decent sell-off here in the markets. And bottom line is that investors didn't want to hold into the 3-day weekend. So we're in a market now where investors are kind of skittish and a little scared here. And that's indicative of kind of the environment that we're in. We talked about this rally here. Look, this is just summer rally. That's all it is. And the volatility is going to come back. And it's coming back in a big way. We're actually coming back into kind of a sell the rip mode, right? So we had a gap up and we're just selling that rip now. So I didn't honestly think that it would come back this quickly as far as the aggressiveness of it. I thought we would get a little bit of a bounce off the 390 area and maybe kind of sustain that for a few days, maybe even a week. But they came back and sold this pretty hard, especially going into the 3-day weekend. And it's definitely not characteristic, right? So holiday weekends, it's an upside bias. They usually float the market higher on light volume. Going into the holiday, you want to get everybody feeling good. And there's usually just not a lot of participation. So to see a big sell-off going into a holiday weekend like that, especially Labor Day, it's a sign that the market is weak right now. And we definitely have to be careful of that. Now, at the same time, I still think there's a good amount of support here in this area. If we take a look at the weekly, here's the Spiders weekly. This is a good area. So this is kind of where we struggled with in pretty much most of the month of July. And we couldn't break out. So that's going to be your support on the downside. 1, 2, 3 weeks down. Usually you'll get a bounce here. Now, I don't expect it to be a huge bounce. I think it's going to be more of kind of a choppy kind of flag here. And again, we are in, I believe, sell the rip mode right now. So we may get a little bit of relief going forward here. Let's take a look at the triple Qs. Same thing. So, right into that area, 1, 2, 3 down. A little bit short-term oversold, but overall, this is the environment we're in right now, and we're still expecting some more downside. Doesn't mean it's going to go down in a straight line, but the market is weak, and it's definitely showing that right now. You can see the triple Qs here now back below all 4 major moving averages. Same thing with the Spiders here, all back below all 4 major moving averages, and even tested that 50 MA there on the daily on Friday's gap up, and just, a complete and utter rejection with good volume. So 99 million shares there, and you can see the selling volume here is picking up. The light volume here was giving the market an upside bias, and now that the volume is picking up, we're seeing those sellers come in and they're really pushing this market lower. So again, I think we probably get a little bit of relief here, maybe some chop, something of that nature, but I am expecting more downside here as we get into the month of September more. All right, here, so let's take a look at some sectors. So let's start with the semis as usual. So last week I gave you that 211 area, and we gapped below that on Thursday. So that just got wiped out. That was really on the back of, the United States banning chip sales from NVIDIA to China. So NVIDIA got smashed with heavy volume there. So about 14 or 117 million shares there on the daily there on Thursday, and fresh new 52-week low for NVIDIA. I think it's actually a little bit oversold here in this area, but overall, just really dragging the sector down right now. And it was kind of just a slap in the face to a sector that was already trying to hang on to this level here. We gapped below that 211 level I gave you. We do have good support right here. I did put in a little bit of a tail candle on Thursday, and you got a retrace Friday. I think it's got a good chance to hold up right now. But if you lose this tail, you get a close below that. This could get ugly quickly on the semis. So, I never like to see the semis leading to the downside. You always want to see them leading to the upside or down less than everything else. So when the semis are getting hit, it's usually a bad sign for the rest of the market. Cloud software here, jumping over to the IGV. So last week I said about 277 to 275, that would be support. We actually pierced below that on Thursday with that big gap down. The whole market got hit. Here's the triple Qs got hit with that gap down on Thursday, and actually closed green there on Thursday, but IGV gapping down. So it blew through that level, but then it ended up closing at 277.24, and then on Friday we closed at 275.43 there. So it held that level I gave you by Friday's close, which is a small positive here, but overall still getting hit pretty hard. You filled that gap there on the daily. If we lose this level here, it's pretty much back down to the lows. You still have that old trend line there going way back. That's the pre-pandemic high. So if you start to lose these pivots here, it's going to get ugly quickly. There's not a lot of support down here. It's pretty much just up in a straight line. We didn't build a lot of support there. So careful with cloud software at the current time, especially if we get down into this lower range here. All right, DJT, let's get under the transport. So that 14,100 level I gave you guys, that got cut through pretty much like a knife through butter here. So Dow Transport's back below all 4 major moving averages. I'm beginning to think this level can probably be erased here. So we go back to last year, we have good level here, pivots, pivot there, pivot, and then it kind of just ceased to be a level after this little break here. So it just isn't being respected anymore. So I'm going to get rid of that now. But overall, you'll still have some support right down here. So if we just draw a line, you can see this was kind of your flag here, and this is where you tested. So we couldn't break out, and then you went up, back tested it. So that's good support. We went into that, double tested it on Friday after the reversal there. And again, it's still pretty decent. It should hold up here in the short term. You can see it on the weekly right there. But overall, again, back below all 4 major moving averages on the daily. I'm not expecting much of a bounce. Friday was really a slap in the face to the market here, because this should have been, the bulls really should have V-shaped here. If the bulls wanted to say, hey, the lows of the year are in, and we'll just flip back over the spiders here. The bulls wanted to say, hey, the lows of the year are in. We needed to bounce off this 390 level and then V-shape. And the fact that we couldn't hold a gap up off of the perfect jobs number, at least the perfect jobs number for the market, is very indicative of the strength of the market right now. But anyways, let's get over here, shift gears into interest rates. So TNX 10-year, again, moving up here on the week. It did give back some of the gains on Friday. You can see we basically went into that reversal bar there. So you had a nice topping tail there, and then it kind of reversed. We tested that on Friday. I think some of it had to do with, the market was getting hit so hard, and there was almost a little bit of panic going on Friday. I wouldn't say panic, but it might maybe a micro panic. And you kind of saw a little bit of a flight to safety there, maybe to bonds, and you can see the 30-year there as well, down 89 basis points there on the 10-year, or on the 30-year yield, excuse me. And again, kind of getting close to that double top area. But overall, interest rates the yield curves are still well inverted, especially on 2s and 10s, and 5s and 30s, actually, if I'm not mistaken. So they did pop back positive on Friday, but they were inverted for most of the week. So lots of distortions going on in the market, and the longer this remains like this, the more damage it will do to the market in general. But for right now, bonds did pull back in a little bit on Friday. Again, something having to do with a bit of a safety play, if you ask me. HYG here, again, very, very weak. So it's pretty much given back almost all of the gains from, take a look here. So this is the low of the year on June 13th. And on Thursday, we got within, what, $1 or so of that low. Your low here is 72.89. The low of the day here was 73.61. So we got basically within like 60, 70 cents of that low on HYG. This is giving back all the gains. Not a good sign, not a good leading indicator here for stocks moving forward. All right, home builders here, XHB. So we lost this little pivot. This is the pivot I had last week. back below all four major moving averages, and losing this pivot. Next level is down here. We definitely don't want to see that break there on the XHB. Same thing with ITB. ITB is a little bit on the weaker side. This is already testing that level from June 13th. So that broke, this level broke here, and now we're just kind of bouncing inside. If this starts consolidating sideways, it's telling you it wants to go lower. So not a good look there for home builders either. VNQ, just like the rest of the market, gapping up, gap and crap day, and closing back near the lows on Friday. Could not get back above this 93 handle. And again, your level right here is going to be 90, we'll call it 90.50 on the daily time frame, and that's going to coincide with those lower levels there on the ITB and the XHB there. XLF, so fins, again, gap up on Friday, could not hold the gains right into that, beautifully touching that 100 moving average. Nice reversal. Again, closing below all four major moving averages on Friday. So again, a rejection of that moving average, and then again, didn't take out Thursday's candle, so that's your positive. But your next major level is right down here at 32.23. You can see that on the weekly as well. So there's your weekly pivot. I'll zoom in for you. There's your weekly pivot, and then you couldn't break out. There you broke out. So there's your that would be your back test area right there. If that goes, that is spelling trouble for the market. XBD. So broker dealer has been telling you guys for weeks here. It's like, look, this thing's not building any support. This can go down very quickly. We had one little leg down, little bearish inside bar up, and then a really good flush this past week. It did bounce off the lows nicely. We basically kind of came down and just kissed on the cheek that 50 moving average essentially, and then a reversal again on Friday, rejecting that 200 moving average. But you can see how fast it can move down when you don't build any support on the way up, and that's why I've been saying, like, be careful of these brokers here, because there's no support moving up and there's not going to be any support moving down. But still hasn't gotten to that 420 level there, but I think it will eventually. Maybe a little bit of a bounces in the cards. And if this consolidates further, it can blow through that 423 level very easily. And then you've got your next level around 418. And then the big one is right around, we'll call it 400 there. So those are your levels on the downside for the broker dealers. All right, so let's shift gears, get over to crude. So last week we talked about, the first positive here was that we got above, we had a higher high. I believe this was Monday. So this is where we were last Friday. And we got above that 20 moving average, and we made a daily higher high. So I said that was kind of your first positive. I said the negative, though, is that you still have a bearish inside bar on the weekly. And as you can see, that's starting to play out a little bit here on that weekly time frame. So we went up and touched that 50 MA, and we got a pretty good rejection there. So 1, 2, 3 down, little pause here. I do think crude has one more leg lower, and I've been saying that for quite a while. And it's not a big leg. It's not a big move. But I do think it needs to test some lower prices. Listen, the White House, historically, they want to push prices lower on the energy prices lower into the election. We're getting closer to that. It does take a little bit of time, but I think that we're getting close to a very, very good buy level on crude. But these things take time. It's a process here. So we got to be patient. But overall, we're looking at this level we're basically right at the lows, so 85.73. If that goes, you're going to have a little bit of support at this trend line, this yellow trend line here. But you kind of consolidated a little bit above it, so I don't know how well it's going to hold. But overall, I think we're in the process of putting in a bottom here on crude. So I'll just leave it at that for now. Got to be a little bit patient here. We'll wait for the right time, and I think we'll get a really good buying opportunity here moving forward. But got to just be very, very, very patient with it. All right, XLE. So did retrace a lot of those gains we talked about last week. Broke out of this channel, and then just kind of faded with the rest of the market for the week. So back kind of inside this little pennant pattern here. Overall, it's holding up really well, and this actually held. This was actually green on Friday, so up 1.83%. So this held the gains from the gap up that we had in the morning. XOP also holding the gains as well, up 2.36% on Friday, and OIH up over 4% on Friday as well. So the energy sector, the energy stocks are still holding up much better than the rest of the market, and I expect that to continue moving forward. Doesn't mean they won't have corrections, doesn't mean they won't do some backing and filling. But overall, this is kind of the sector that we're going to look to be in here on the long side, if any, right now. Nat gas here. So it pulled back off the highs. We talked about that last week. And, it faded a little bit here. It did close finally below that daily 20 moving average. So that's really the second time since July 12th that we've been below that on a daily closing basis. That doesn't mean anything unless we see follow through, though. So if we do continue lower, I've got a lot of support here at the 150. So 150 moving average are right in this. They're basically intertwined. And again, we're going to go back to this trend line that we've been talking about for a long time. And until that trend line fails, I'm going to keep using it. So it's been working really well. So that would be your next logical area if we were to fade down. If not, there's nothing to say it can't get through $10. It's still really strong. You did get a pretty good weekly reversal candle there, though, but it's holding up well, and you definitely have to respect nat gas for the time being. Speaking of having to respect, dollar index, and this thing just does not want to go down here. So it basically, if you guys haven't been following, it basically got to the 110 level. So 109.97.7 was the high. And I guess you can call that enough. That's close enough of a 110 tag. The problem is it's still holding up. So we tagged that level on Thursday, and then we just had an inside hammer day on Friday. So there's no reversal signal. There's no sell signal on the dollar yet. I am expecting one, though. So I'll leave it at that. Like we're looking for one here. This is parabolic on the weekly. It's basically parabolic on the daily. It's definitely parabolic on the monthly. So we're looking for a reversal here in the dollar at any given time. As far as when it can happen, I'm not sure, but it's really lofty. And I think, listen, everybody thinks that interest rates are the reason the dollar is up. It's part of it. A lot of it is just that every other currency is so weak that the dollar is continuing to move. And that's really just the end of it here. And I expect there to be, when the dollar reverses, there's going to be a move into hard assets. So I'm expecting gold here. I still think gold has a good shot of putting in a higher low here. You can see the GLD actually got to a double bottom essentially on Thursday, a little bit of a kind of a morning star reversal, a gap down, and then a gap back up. But I do think gold is in the process of potentially putting in a bottom here. I do like silver a lot down here. I'm actually personally looking to accumulate some physical silver down here. I might actually do that this weekend, honestly. I think we are in an accumulation zone anywhere below 17 or anywhere below 18 to 16. So I really like this level here on silver. And actually just read on Twitter today, it's the third time ever that commercial shorts or commercial on the COT, commercial hedgers are holding net long position in silver futures. And the last two times that happened, we had 20% rallies in silver. So I do like silver right here. I think there's a good chance we put in a higher, or excuse me, this is lower low here, gets taken out. And we do move up here. I do like the miners here as well, SILJ. So take a look at this. You've got a positive divergence here. So we got a higher low on SILJ. SIL actually trading more with spot silver, but the juniors are actually outperforming spot. So that's a good sign there for spot silver and for metals here. And then platinum, I also love platinum. I do own PPLT as well. I think this is in the process of putting in a W bottom. So nice move down here, get that classic pierce of double bottom, and then I think we're going to take off here to the upside very shortly on platinum. So I am getting very attracted to the metals here, and I do like the look they're giving me here. Copper, a little bit less so, so that broke down. I talked about this last week. I did not like that. The fact that we tried to push up on last Friday and then pulled back in. I wanted to see a little bit more consolidation. And this is kind of what happens when you try to break out before you're ready. A lot of the time you'd end up going the opposite direction. But overall, there's still a good amount of support here on copper. If we look at the weekly, you're into that 200-week moving average. So just kind of back testing that area. You want to see a good bull reaction off of that, though, in the near term for copper. Otherwise, it could get back down to that 330 area and then possibly the 320 area as well. Lastly here, let's just quick cover uranium. So CCJ held up, it basically held all the gains. So we had a huge pop here on Monday. So we talked about this last week, and then just boom up here, and then 1, 2, 3, 4 inside candles here. So right now it's still telling me it wants to go higher. We're just seeing consolidation. We're not seeing a major rejection. Good volume there on the breakout. you are into a lot of resistance, so this is going to need to do some back end filling. I want to see those moving averages start to catch up. But hey, the trend is up on the weekly. It's holding up really well. I love the spacing between the moving averages. That's a strong trend. Let's take a look at the monthly. Again, same thing. Look at the moving averages starting to converge, starting to see spacing between the 50 and the 100. So this is holding up really well. Those of you who follow URNM, again, same kind of thing. Back above the 200, it did retrace that a little bit. So a little bit on the softer side is the URNM and the URA. But CCJ is holding up really well, and that's really the leader. And as long as this is holding up, you know, it's really just the flagship name in the sector. So that's really all that matters. A couple of potash names. So MOS and IPI gave back all those gains from last week. It's actually not a terrible area to buy this year. You're basically just back testing that breakout. So it got a little bit of a bid here. Maybe got a little ahead of itself. This is a lot of resistance up here. So it's probably got to do some back end filling, but I'm not seeing anything terrible there on the potash names right now. And then the ag names still kind of just stuck in this channel. So those fell pretty sharply this week. So you are in kind of a, and I talked about this a few weeks ago, this is kind of a little bit of a bear flag here on the weekly. The positive is the trend is really strong. So a lot of the time these patterns can fail, or, you know, it can just result in a minor correction and then you can move back up. So I just want to give a little update there on the ag names. They did fall into that lower range of that channel this week. Outside of that, let's take a look at crypto really fast. So we'll get over. So Bitcoin basically just in this holding pattern. Again, it's starting to look more like a bear flag here. So we talked about this bear flag last week. It played out. And the positive here is that Bitcoin's kind of just going sideways to up, really, while the stock market has gotten hit really hard this past week. So that's your positive here. Ether continuing to be strong. You actually have almost a bullish pattern here on Ether, and Litecoin actually getting back above this red bar and this red bar. So Litecoin showing some strength, Cardano showing some strength as well. But then you have a mixed, kind of a mixed tape. So Doge here, kind of a bearish inside bar there. Polkadot, another bearish inside bar there, and then Bitcoin also kind of with a bearish inside bar there as well. So a little bit of a mixed bag in crypto, but the positive here is that it's outperforming the stock market. And a lot of the time, you know, crypto can be a little bit of a leading indicator because it is such a risk-on asset. So if we're seeing crypto hold up, maybe that's telling us that the stock market wants to hold up here and get some type of a bounce here over the next couple of weeks. Anyways, guys, I'm going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com, and I'll talk to you all next week.